This is Siddharth Alwalia. Welcome to the 100x Entrepreneur Podcast. This episode is brought to you by Prime Venture Partners, an early stage VC fund led by Amit Somani, Shripati Acharya, and Sanjay Swami. Prime is often the first institutional investor in category creating tech startups in fintech, SaaS, healthcare, and education, such as MyGate, Neo, and Reco. To know more about Prime, visit primevp.in. Today I have with me Ishaan Mittal from Sequoia India. Welcome Ishaan to the podcast.
Thank you, Siddharth, for having me. It is a pleasure to be here.
Ishaan, we would love to know more about your journey.
So, I used to work at BCG right out of college, and having completed around 2 years at BCG, I got to know about this amazing analyst program that Sequoia runs through one of my seniors, and I decided to apply for it. I was fortunate enough to be selected for it back in 2011, and that's where the journey started. After that, I spent around 3.5 years at Sequoia, covering multiple sectors, working with many entrepreneurs, then went to business school, and then came back in 2016.
Ishaan, which are the companies you have been a part of Sequoia deeply?
Having spent 9 years, that list is quite long. It started with Pratap Snacks, which was the first company which I got a chance to be involved with back in 2011. It's an FMCG company based out of Indore. After that was Pine Labs, which has been a phenomenal success as a payments business, a market leader, and a great investment for us. Apart from that, over time, got exposed to businesses like Winnie Cosmetics, which is a deodorant brand company. Brand is called Fog. More recently, have been a part of our investments like Razorpay, Mamaearth, Finova Capital, and Five Star Finance, which are NBFCs. So quite lucky to get a very overall exposure towards many sectors.
9 years is a long time at Sequoia. What has made you stay here, and the most exciting thing that you look forward to each day?
Yeah, it is a long time. Many things, but most importantly, people. I've had the fortune to work with some amazing people at Sequoia. People at Sequoia are extremely nice, very supportive, but most importantly, everyone is extremely invested in ensuring that everyone at Sequoia succeeds. I think this is something that is culturally ingrained in Sequoia, starting from the very top, where Don, our founder, did the same for Doug and Sir Michael Moritz, who then subsequently did the same for Shailendra, Mohit, GV, who then subsequently have been phenomenal teachers for people like me. Someone once told me that investing is an apprenticeship business. So I want to be at a place where the people I work with are spending time in teaching me. And I've been the beneficiary of amazing mentors throughout. So I want to continue learning from the best folks in the industry. To the second question as to what excites me there's just one thing, which is the chance to meet amazing founders every day. It's extremely energizing. Each of these founders are an expert in their sector, in their area. I'm extremely fortunate that these people take out their valuable time to help us understand their business, their space. And every day I realize how little I know and how much more there is in this world to learn.
Ishaan, what's unique about the Sequoia culture that you mentioned about?
Well, I've not been at many other investment firms, so I don't know if it's unique. But what is special is our singular focus on doing the right thing for all our stakeholders, namely our founders, our limited partners, and the people who work at Sequoia. And it manifests in different ways. For our limited partners, it translates into being extremely performance focused. That is the core of every decision we make. We have the fortune of working with the limited partners who are institutions who impact millions of lives across the world, such as endowment funds, hospitals, pension funds. So in some way, all our efforts, all the returns we generate are in turn helping them make millions of lives better, and it gives a sense of purpose to us. Secondly, for our founders, the way it manifests itself is that we are extremely founder first. And if you spend a day at Sequoia, you'll realize that founders are at the core of every action, every decision we take. And it reflects very well in our mission statement, which is we help the daring build legendary companies from idea to IPO and beyond. That's our mission statement. That is what drives us, and is also something we are really proud of. We want to be the 4 a.m. call for our founders. They should feel that we are their partners and be open to sharing the bad news and not just the good news with us. And that's the reason why we are willing to go an extra mile for them and be a long-term thinker for their businesses. And lastly, the unique thing about the culture is our focus towards doing the right thing for employees. I talked about that in the beginning, how everybody is extremely invested in making sure all of us succeed, all of us get the right exposure, we learn, and most of all, enjoy our lives.
You could have stayed back at Harvard, and joined a US firm. What made you come back to Sequoia?
Well, it's a twofold answer. I think first decision was to come back to India. I believe in the Indian opportunity. I believe that the next 30 years of our lives are going to be very, very different from the last 30 years, and create very, very large opportunities, businesses, new sectors, and I want to be a part of that growth story. And coming back to Sequoia was an easy answer. I loved it so much in the beginning for the 3.5 years before. I didn't have any other ideas.
What's the most important things that you have learned working here?
Learned many things. Maybe the most important of them is being open-minded. See, I'm an engineer by background, and the Indian education system teaches you to be right. You have to always gun for the right answer. That's how you score marks. That's what we are told in maths, in physics. But when you start doing investing, I think the biggest thing I have learned is that nothing is given. There is no perfect right or wrong answer like in maths. It is instead a complex chemistry of decisions you make on a daily basis, and there are many ingredients that impact the final answer, and it's full of exceptions. In our business, we are more often wrong than right, and it is extremely important to keep an open mind and be willing to change your mind when counter data and facts present itself. That has been the biggest learning, and these facts and data points come from many directions. It could come from a team member asking a question that I had never thought of before. It could be through a founder who presents a very different take, a very different perspective on a certain sector and how it's evolving. It could be a customer's reference call with somebody explaining how they use a product, which is very different from how I originally thought it would get used. So that has been my biggest learning, be open-minded.
And what are your other learnings, like I would say key learnings that are part of you now?
The other big learning for me has been to always be long-term focused. Every decision we take, every question we ask, think about the long term, and think about the 5-10 year implication of everything we do versus the immediate next quarter, next year implication. And it's very easy to get caught in that because that is measurable, right? You take a decision today, in 3 months there's an implication of that. Next year financial, there's an implication of that. But in this business, as partners with entrepreneurs, what matters is the long term, the 5 year and the 10 year, because that's the time scale we are looking at when we are trying to create enduring companies along with our partner founders.
What are the sectors you look at Sequoia currently?
As Sequoia Capital India, we invest across a variety of sectors, including consumer, financial services, fintech, payments, education, enterprise software, and healthcare. And we would have more than 10 companies across each of these spaces. And given how India is growing, each of these sectors is growing very fast and are presenting opportunities to create very large businesses.
And what are the sectors you specifically look at?
Within this, I focus on consumer, which includes FMCG brands, retail, consumer internet, content, and gaming. And the second space I look at is financial services, which is NBFCs, fintech, and payments for us.
And can you tell us more about the macros of each sector which excite you as an opportunity?
So let me keep it as two large buckets. One is consumer and one is financial services. In consumer, India is probably looking the best it has ever in this area. And it's driven by a few macro trends. We now have 500 million plus internet users. The data is at the cheapest. Consumers are consuming it every day more and more. and Indian consumers on average are richer than they have ever been. This concoction together is presenting a phenomenal tailwind for many of the sectors I mentioned in the space to create businesses. And the nature of these businesses is also changing. To pick an example, if you were creating an FMCG brand 7, 8, 9 years ago, the only way for you to do it was a traditional FMCG fashion. However, today, the way these brands reach their consumers, market to their consumers, distribute to their consumers has completely changed. The micro marketing is a big trend. You are using platforms like Instagram, YouTube, as compared to only TV marketing. You are using all the e-commerce channels, including your own website, as compared to the general trade and modern trade. That those were the only channels available, and this is creating a pretty interesting opportunity to disrupt the FMCG brands of yesterday and to create a very large company over the next 10 to 20 years. Similarly, in financial services, I think financial services in India is still a very underpenetrated space. People are consuming more. A lot of this is leading to people taking more loans of different types, whether that be housing loans or personal loans. And again, as the medium of consumption is changing and coming more online, it is presenting opportunities for people to serve these consumers in different ways, whether that be through digital personal loans, that be through credit cards, or that be through creating marketplaces for financial services. And similarly, the payment methods have changed completely. I think the number of options consumers have today to make payments is again the highest it has ever been. In addition to the credit card and debit card, we obviously have UPI, and there are many companies offering that. We have pay later solutions. There are many companies coming up with different formats of that, and that is giving rise to many payments businesses that are providing that infrastructure to their merchants.
Can you tell us about the consumer investments you have made since you came back in your growth role at Sequoia?
Sure. In last 3-4 years, we have been investors. We have invested in many consumer internet businesses. I think one of the most recent ones of that is Mamaearth, which is going after the thesis that I just mentioned of being a digital first personal care brand for their consumers. And the founder Varun Alag comes from a very rich brand manager background and has taken a very different take to this market, something we have not seen before, and we are very excited to partner with him. A few other investments Sequoia has made in the consumer internet space would be a business like Eruditus, which is an education business which is focusing towards its consumer to help them do higher education, but without taking the break and going to US for that, but they are rather bringing those Ivy League tier 1 US education brands closer to their consumer, allowing them to upscale and get the degree. These would be a few examples.
I know it cannot be templatized, but few of the things you can draw from your consumer investments. What are the qualities the founders had, which you can think were in common while you were making the investment, and decisions that have proved right based on that?
Well, you said it right. It cannot be templatized. Every founder is different and special in different ways. But I think some of the common themes which we have noticed are extreme passion for what they're doing, and many a times it's coming from a personal experience. And many a times the business evolves over time, but the root of starting that business belongs to a very personal experience for these founders. I think second is a very long-term focus, looking at the business in terms of what it would look like 10 years, 20 years from now, and focusing your decisions in terms of people you hire, products you launch, how fast you grow, which markets you go into, only based on what you want your business to be in the 10 and 20 years. And third, I think very regularly, the best founders who have created enduring organizations have shown extreme empathy. They are very empathetic to their people. They are very empathetic to their customers. And that helps them continuously improve their organization and prepare it for the next leg of growth.
So now coming on to financial services, what are the key micro trends except the thing you mentioned that there are more options available to pay? What has been driver of today's India financial services infrastructure, and where do you think it's going?
I think one of the amazing drivers for Indian financial services ecosystem has been the initiatives that have been taken by the government and by RBI, by NPCI. UPI presents itself as one of the most forward payment infrastructures. We have now seen the account aggregator model, which is providing a democratized layer for financial institutions to access consumer data in a more seamless fashion. So I would say that is one big tailwind that is helping this sector grow. I think the second is just more and more availability of data. I think consumers and institutions alike are present on digital platforms more than ever before. They are leaving a larger footprint about their own data online than ever before, and this is allowing financial institutions to actually lend to them in a much better fashion, because they're able to understand their consumers in a more rich fashion than just looking at their bank account and their transactions. And I think that's a very interesting trend we have seen. Many companies are using this trend in different shapes and forms to build their underwriting models.
Can you throw more light about, in a deep manner, on the companies at Sequoia that you have been a part of the investment committee, or you are a part of their board now?
We've been very active investors in financial services recently. We have invested in three offline NBFCs, namely Five Star Finance, Aptus Housing Finance, and Finova Capital. Five Star and Finova are MSME lending businesses, while Aptus is a housing finance business. And a common theme across all three is that they have been run by extremely experienced founders who have focused their strength on serving a specific class of consumers and building a culture of strong underwriting, which has led to a very high quality book creation. And the second set of companies we have invested more recently are payments businesses, which includes Razorpay, which is an online payment aggregator, and BharatPay, which is a significant market leader in the QR payments space. Both of them are growing extremely fast and have a lot going for them, and we are extremely excited to be partners with them. The third set is more marketplaces in the fintech space, companies like Credex, who are taking a off-book approach towards lending and enabling lending by working with many financial partners. MoneyTap has done something similar. They are a more hybrid approach, so as to say. But these are the few companies we have invested in recently.
Can you show more light on the Razorpay investment? What were your thesis when you were making that investment? And there have been so many payment gateways, so many payment B2B solutions. What made you invest in one more?
Well, first of all, payments has been an extremely positive theme for us as Sequoia Capital globally. In India, starting from Prism Payments back in the days, which was an ATM company, then Pine Labs, Citrus, and now Razorpay BharatPay. So it is a sector of high interest. Within that, what excited us about Razorpay was the vision of Harshil and Shashank. I think you are right that there are many businesses in this space, but their approach to this category is extremely unique, and they are extremely engineering and product focused when approaching the problem of payments and keeping the merchant and the merchant's consumer at the center of problem solving, which has allowed them to come up with very unique upgrades in the space, which includes reducing the onboarding time for their merchants significantly. If you're a merchant, you don't have the time to spend days and weeks trying to bring online a payment method, and Razorpay reduced that time to few hours from few days. Then they have also gone to launch innovative payment products such as enabling payments through links, helping their merchants reduce frauds on cash on delivery through their products like Third Watch, to increasing their customer satisfaction by enabling instant refunds. And then most recently, they have launched a neobanking product for their merchant customers. So this innovative product engineering vision that Harsha Shashank had and have is what excites us to be partners with them.
Something off a topic, we are sitting here in 2020. Every week we hear a new neobank opening up. What's your take on that? Where these guys will be in the next 3 to 5 years?
I think it's an extremely exciting space. If you look at Indian public markets, the largest share of value lies with banks. Many of these banks, such as including PSU banks, are very traditional, were created many decades ago. And I think there's an opportunity to create banking systems, whether full stack or riding on top of the banking infrastructure, which is way more consumer centric, which is able to serve today's millennial consumers and also the corporates in a more advanced technology fashion. And I think many of these companies will choose their niches, their group of customers, and cater to their needs much better than banks, and create very valuable companies, not just in the next 3 to 5 years, but companies that will endure and become very large businesses over the next 10, 20 years.
And why do you think that every consumer sector needs a different neobank?
I don't think every consumer sector needs a different neobank, but different consumers will have different set of consumers may have different needs. For example, the top 1% consumers of India may need a very different product than, say, the blue-collared worker of India needs. And there is a chance that when many companies go after the same space, there will be companies that take different routes and become extremely successful, strong, and deeply entrenched in that consumer segment. The good thing is that there are many such consumer segments which are very large, and that presents the opportunity to create more than one company in the space.
So, like, what are these consumer segments according to you?
Yeah, so for example, there's one which is, say, blue-collared workers. There's one which is the top 1% of India. There would be one segment which is, say, freelancers in India. There's a gig economy segment which is growing day by day in India. This is on the consumer side. Then on the merchant side, there are many small companies whom you can target, provide a very different solution, catering to their needs, which the banks are not able to solve.
So, across these 9 years at Sequoia, what has been the key to decision making, especially at the growth stage? How does that process work?
That's an important question. See, decision making is at the center of everything we do. So we have spent a lot of time and a lot of hard work in making sure we create a culture of decision making, which is a fine balance between conviction and consensus. And the reason that these two are very important together is conviction helps us identify outlier opportunities. Conviction is defined by the ability of a few individuals to articulate an investment thesis and paint the dream case to the full group. This is extremely important because if we were not to follow this and only be consensus driven, we could reduce our decision making to only lowest common denominator decisions, which everybody agrees to. While we have seen in the past that some of the best investments Sequoia has made have been driven by conviction of few than consensus of everyone. But that said, we try very hard to balance this with consensus. And what consensus helps us with is it allows us to benefit from the combined wisdom of the group, of the people who are part of our team. If we were evaluating an investment opportunity in the content space, my partner Rajan, who used to be the head of Google in India and Southeast Asia, is best placed to provide his perspective on the space, on the product, on the company. And we would be delighted to understand his views, and that is most important. I think this is the knowledge that consensus-driven decision making allows us to leverage. But at the end of all of this, every decision we make is a team decision. So by the time we are done with our discussions and the debates and the decision is made, what is most important for us that everyone who walks out of that room is fully committed to that decision, irrespective of what our original individual stance was. We are focused on making sure that we make that decision successful as a group. For us, it is about discussing the pros and cons of an investment and coming to a common answer of, do we believe the risk reward equation is favorable. And it starts with a lot of debate, a lot of questions, and by the end of it, there's a very common answer as to where we want to be. And that has been the philosophy of decision making for Sequoia Capital India.
In your time at Sequoia India, how have you seen the Indian startup ecosystem evolve in the last 9 years?
Oh, it has evolved so much. Well, one way to think of it is if we were having this conversation exactly 10 years ago in January of 2010, Flipkart and Zomato would be extremely young companies, maybe 2-3 years old, and Ola and Oyo and Byju's would probably still not be born. Fast forward today, each of these businesses is an extremely successful large company defining the tech ecosystem for India. Now put this in context of the fact that India is a much deeper market today than it was 10 years ago in terms of number of consumers who are online, digitally savvy enough to consume online and have more money available with them, and that there is more capital than ever before available for the founders who are trying to tackle the problems of these consumers. I think we have not seen a more exciting time than this ever before. What has also changed is that the first set of fantastic businesses of India, like Uber, Ola, Zomato, Flipkart, Paytm, Byju's, have provided us with a terrific set of next generation entrepreneurs who have the benefit of having folks such as Sachin and Binny Bansal, Bhavish, Kunal Shah, Dipinder, Byju's as inspirations for them. And at the same time, many of these successful founders we know have taken out a bunch of their time to act as mentors, as guides to these young founders. So that's special and very different for the Indian ecosystem now. The second thing which I alluded to earlier is the access to capital. It's no hidden fact that the Indian startup ecosystem is booming, and that attracts a lot of capital, which is great for the founders because there are more choices than ever before to raise capital from at every round, whether that be seed, Series A, growth round, or an IPO round, which is a challenging fact for us because we have to continuously innovate and think about how we stay ahead of everyone else to be the investor of choice for our founders.
And what are the challenges and opportunities you face as a growth stage investment advisor compared to earlier?
I think two big challenges we face is one, there are so many high quality businesses that it is extremely hard to pick where we focus our energy on and choose to partner with. And the second challenge is that these amazing founders have many choices in terms of the investors they can take capital from and make their partners. And we as Sequoia are continuously thinking and focusing on how to be that partner of choice for our founders. And trust me, it is much more difficult than it was back in 2011. But we have taken some very specific steps to make sure that we are more than just capital for the entrepreneurs. For example, we have a very, very rich portfolio services team going across spaces like finance, legal, technology, and human capital. Anju, who's part of our human capital team, has been an HR leader for businesses like Visa and Dell. And Anirudh in the same team has led human capital for last 20 years. And these are extremely important resources available for our founders, which sometimes we feel can be more important than the capital itself. I think on the opportunity side, it is the best time for us to be a growth investment franchise in India. The number of companies that have scaled today is probably 10 times more than what it was 5 years ago. We believe is the opportunity we have as a Sequoia Capital India franchise across early stage and growth stage investments, because the companies of tomorrow will be larger and get to that stage at a faster pace than it has in the past.
So, you are a growth stage investment advisor at this moment. So, when you are evaluating a business, what's the right time for that business to be known to you? It could be X million dollars of revenue or having so many millions of customers.
Siddharth, I wish we had a perfect answer for that. Unfortunately, we don't. And we discuss this quite often as a group as well. But the truth is, different businesses have different metrics that are important for it to achieve product market fit. And product market fit is what is most important for us as growth stage investors. But what we like to do is that we don't want to wait for this moment to come. We would like to be in touch with the founders and companies at a very early stage and stay in touch, see how things are progressing, how their business is growing, and when they think it is the right time for them to take growth capital, and we believe that they have achieved product market fit, is the best time for us to engage and partner with them.
Ishaan, coming to a little personal side of yours, how do you build your day up? How do you split it between learning and interacting with the portfolio founders?
It is different depending on the situation, but typically our day would be split in say 30 to 40% time spent with portfolio founders, and there's no specific time for it. Interestingly, different founders have different time preferences to discuss matters, and it could be early in the morning, and some founders are late night experts, so it could be that. Another 30% time is generally spent in meeting new companies, investment evaluation, and the rest is mostly focused on learning. Typically, the endeavor from my end is to keep the early part of the day for learning, for meeting people from the industry, and then spend the rest of the day on things I mentioned before.
Ishaan, and the 30% of the time you mentioned you have for learning, what does it look like? What are the resources you tap into?
Well, there's a variety of it. I think the most important one is meeting people from variety of industries, because they are the experts on their sector. It could include in the financial services space, meeting folks at banks, at large NBFCs. It could mean in the consumer space, meeting product managers, engineers, business leaders. But that's probably the most important source of knowledge and learning for me. Apart from that, it is just staying up to date on what is happening in the world in different spaces that I cover, what's happening in US, what's happening in China, what's maybe even happening in Brazil, where is the innovation coming from. And apart from that, reading about more functional areas, such as what are the best ways to build product teams, to build engineering teams, to when is the right time to expand to a new geography. Each of these things comes handy when we are trying to work with our founders or evaluating new investments. But the sources of consumption of this is quite varied.
Thank you so much, Ishaan, for sharing your wisdom, your knowledge, and your experience on the podcast.
Thank you for having me, Siddharth. It's a pleasure.